Good evening here from Dubai for today's live stream, and my hair looks a little bit wild. However, I hope you have a pleasant day or a pleasant evening, or let me know where you are watching from so I can address you properly, obviously, as every day. So today is a very special day because we want to talk about the overall very interesting topic: value stocks versus growth stocks. What is the better investment, why, and what it is in general, all here on this live stream. But before we diving deep down into our today's topic, let's have a look what the market is doing. It's looking positive, guys. The S&P 500 plus 0.58%, the Dow Jones plus 0.72%, Nasdaq positive as well. Well, Apple just made another all-time high, and Virgin Galactic is a little bit volatile today. And before we diving into the main topic, I want to show you something, and this shouldn't concern you. I know there's a couple of Virgin Galactic investors out there that are following this channel, so I just want to show you this. This is obviously not nice to see. However, this is important, guys, to understand. Virgin Galactic and other growth stocks and small companies can be very volatile, especially in the beginnings. You know, good news can be quite significant for the stock, and then next day it can be down. But you know, gaining 15% the one day, minus 5% the other day, then maybe tomorrow again plus 2%, 3%, who knows, right? But you need to understand that if you're investing into this kind of company that is changing the world, then you have to be a little bit patient. So thank you very much for having you here. We have Brazilian, Canada. We have people saying no more airlines for me. So for the person. Then we have Atlanta as well. We have, I think I saw Luxembourg as well. So international definitely here in this live stream now. Let me have a look what is to show you guys. We want to welcome two brand new members. The one is London Graham. He became an Ultimate Wolf and therefore also entering the Discord chat, as well as one-on-one with me. Also Maycan 156, also an Ultimate Wolf, also an Ultimate Wolf. And therefore, guys, if you are getting the Real Wolf or the Ultimate Wolf membership, guys, that you can press, if you're going onto the join button below all my videos and live streams, then you can have, all the tiers. And there's actually 3 tiers, guys, which you will see now here. There is Wolf Pack Gold, which is the standard supporting the channel membership. Then is the Real Wolf, where you get access to the Discord channel, and also here you get the access to the Discord channel with the all other members, and also one-on-one with me. So make sure to check them out. Maybe they are interested for you. It's more value than your Netflix subscription to make money, and I think it's a super interesting thing to be in the Discord as well. Moreover, if you joined, make sure to go on my main channel homepage, and then you go to community, and then you scroll down, and then you will see the Discord link, only visible for members, obviously from the 2nd and 3rd tier. And then we see you on the other side. Let's have a look. What is there to talk about? First, as you know, I like memes, and I found this one. A stock market crash is worse than divorce because you lose half your money and your wife is still around. Well, I liked it. It's a little bit of funny, right? Then we have another one. Stock market crashes, but the guy is not worried because have no stocks. I think those are all the brand new Robinhood users out there that just joined because there was the market crash and are enjoying now cheap prices. And this is a good word, cheap prices. Cheap prices for value stock, cheap prices for growth stocks, maybe, who knows. I believe we are currently in a phase where people and investors are more looking into the value place, okay? Because there's two things out there. I believe that there is something out there that is important to understand. Value investing is always important to buy company when it's undervalued. And the current health crisis gives us a temporary dent in many of value plays like airlines, like hotel business, like booking.com portal, right? Something that we will have also after the health crisis. And now you can buy on the cheap Boeing, Airbus, Lufthansa, all these nice companies that you can buy really for a bargain, and then therefore I believe, this is my theory, that the money flows currently more into the value side, and when the value side is, let's say, more or less fed, then you see that the money will go to get as much as more out of the money, to squeeze as much as possible from the market. Then the money will go definitely to the growth stocks. And we have seen how crazy growth stocks can go up in January, February. Tesla went up, Virgin Galactic went up. All these growth stories had so much money coming in that the stock just going up and up and up. So we saw many all-time highs for this growth stocks, and we will see them again. Don't worry, this is just the beginning, and therefore I'm more about growth investor than value. But though I also like some of the other features that value investing puts its value on, well said. And therefore I think that sometimes I'm a little bit in between, but more into the growth opportunities, the companies that's changing the world on the how we live and how we consume and which products we will buy in the future. Just have to get the sip of water, and we are seeing the following. This is a graphic that is showing you S&P 500 value index and the S&P 500 growth index, which is actually just a little bit modified to show you which strategy gives you more money over time. And as you can see, the growth index went way higher than the S&P value index. And as you can see here, the S&P value index is about 120% return, and the S&P 500 growth index did more than 200% here. So in terms of returns, 1-0 for growth investing. And let us look more into that. So that is the two investment strategies and what is the focus on those both. And also we see that there's totally two different approaches. The focus is in intrinsic value for value investing, and the growth focus is for potential value, how much the company can be in 5 or 10 years. Then you look into the timing. What is the current value of a Boeing? Is it now undervalued compared to a couple of years ago? Is it now a great opportunity to buy this value that is inside this company for lower prices? And for growth companies, it's really what is the company worth in a couple of years. Then you have the profit source, which is for value investing mostly, not that much the gain of the stock, but sometimes the dividend of the stocks. It's a little bit a mixture of both. I don't agree with this graphic that it's mainly dividends. But you can say that a value stock should also gain a little bit. You cannot only go for dividends when you do pure value investing. And for growth investing, it's just the capital gains. You want that your stock going up 3, 4, 5 times per decade or more. You want really the stocks to skyrocket. Therefore, you catch them early. And if you are finding one company that is changing the world or having very innovative product, like currently it can change, right? I mean, look at those stocks that currently going through the roof, which is, for example, Teladoc. I don't know if you know it, but Teladoc is a stock that absolutely crashed over the last couple of months. Here you see year to date, the stock was in the beginning of the year somewhere around 83, and now they are at 200, guys. This is just because they are having an innovative product, I think a kind of an app where you can talk with your doctor, which is obviously fantastic in a health crisis. So, and moreover, we see other growth stocks like, for example, Zoom, that absolutely benefit from the stay at home rather than going to the office. Also here, year to date is absolutely insane. We started somewhere here with $68 in the beginning of the year until $250. So we almost 4 times our money. This is incredible. And those are the opportunities out there. You know, I can pull another one. Tesla, if you want, is also a big growth company. They are growing 50% per year. And as you can see, also the last year was absolutely crazy when everything worked out here for Tesla. Then you see that the stock's absolutely exploding. And this is the thing that you want to have when you are investing into growth stocks. So then you have the pricing for stocks. In value investing, you are looking for companies that are undervalued. You look into the balance sheet, you look into the PE, PS, asset versus price, and all of this other indicators that you can find. You know, everything what starts with P, you run through some analyzers and you squeeze all of the numbers out of the all the data that you can find. And on the growth side, you really just, you know, have an overlook. Okay, does the company is cash positive? How much cash flow they have? I think those are the big parts of growth investing. You really focus more on the success story, how they can scale the business, how they can, you know, serve 1,000 clients instead of 100 clients, how they can 10 times, and how is their profit margins. You know, those are the most important part into growth investing and growth companies. What is funny though, you know, every company, brand new company, is a growth company in the end, because they are starting with huge improvements. You know, like for example, let's say you are a garage company like Apple or HP was, and you are selling one device, and within 1 month you are selling one device more, so 2 devices. And then total sales would be 3 devices. So first month 1 device, second month already 2 devices. That's 100% increase in your sales, guys. Congratulations. And you know, the profit margin looks also beautiful, because the same stuff could work on 2 pieces of hardware, you know. And therefore every company starts slow and with high growth usually, until they become a very value company where they are really producing steady growth. Maybe they pay some dividend. You know, those are the attributes that a growth company then turns into value company. Okay, then what are the risks? For value investing, it's, I believe, wrongly assessing the value. You have value traps, definitely. I also think value investing or companies that are already on the markets is always to be, let's say, very important to understand that they need to change, guys. They need to develop, they need to really become better and better, and I'm becoming better and better as well. If you are smashing the like button, how smooth was that? So thank you very much for smashing that like button. This is very important for the channel. And yeah, so actually I think these are the risks for value investors, that where you invest, you know, in these blockbuster companies or whatever it was, and then they just get overrun by a growth company because they have the better the better product, the better future mark. So the future market and the future growth, you know, the future positioning and marketing, and know what is the next big thing. And value companies are sometimes leaving the focus or having problems, obviously, to invest into new businesses if they heavily invested already into the old business, right? And moreover, let's see the next point, which would be the risks. the tendency to outperform. And this is a quite interesting point because it's showing us when those companies are actually tending to be better, to be more, interesting for investors. And as you can see, when you have the initial recovery, so as you can see in this phase, which I would say it's the initial recovery, then you have the value investing that is more and more important, and then you have the high GDP growth and high inflation. Then value is really the place where you want to be rather. And then on the other side, if you are in the late recovery, then slowly, and this is what I explained in the beginning. So it will shift, guys. Now everything is going to value investing, into the stocks that like Boeing, airlines, everything that they can recover, restaurants. And then once the value is, or the undervalued thing is closed, and the people think, I think that's a pretty good value for Boeing right now. It's not like they grow like 30, 40, 50% per year. So I rather, look now where the money can flow now. And then the market turns into growth stocks, and then growth stocks explode. And then we have the cycle all over again every few years. And therefore you see that this is important. And then if you have low inflation as well, or low GDP, and also I think that there should be a point with cheap money, right? If you have low interest rates, then growth investing is definitely more interesting as well, because money is cheap. And how strong growth investing can be, you see, for example, I don't know if somebody know, but ARK Invest is a very interesting growth stock and innovator investor. Let me pull out their website here. So their name is ARK Invest. We invest solely in disruptive innovation, growth stocks, in different kind of fields, like here autonomous tech, robotics, genomic, next generation internet, fintech innovation, space exploration, mobility as a service, 3D printing, it's totally few different things that have all much room to grow. And actually this fund outgrow many others over the last couple of years. As you can see here, for example, the year to date for this year, ARK Invest is 10% plus, while the S&P is, for example, minus 10%, and the MSC World Index is also minus 14% even, so 25% difference between ARK Invest Innovation ETF and the, let's say, MSC World Index. Yeah, this is the one. So as you can see, growth investing is really potential. That's why I'm more tending to growth investments, and on this channel here which one I'm investing on. Make sure to smash also the follow button on my Wolf of Dubai Danny Instagram. This is the name where I'm making sure that you are fed with some behind the scenes footage, stories, pictures, when you are not craving here for content. This is what you should do when you are around town. So let's have a look into the comments, guys. Katie Wood is definitely a very interesting woman, very bullish on Tesla as well. She was so many times in the news, 15,000, 20,000, who bids more for the Tesla bullish thesis. So I really like that. Let me see. We have people from South California. We have people from let me see. Okay. I love that you guys have a lot of conversation in the chat, and we are like a small community, seeing each other almost every day. This is absolutely amazing, This always makes my day, guys. Yeah, I think that's it. I think we keep this live stream very short, and I really hope you could get value out of it. Make sure to smash that like button, and I see you in just a couple of hours with brand new content as always here on this channel. Subscribe if you're new, and enjoy the outro.